All right, hey everyone, it's 1:50, and I'll just give you a end of day recap because we did have quite a bit of volatility, and from where we shot early this morning, corn is up about 14 cents. Right when we recorded that first thing this morning, we were trading right down here at the very bottom, and we pretty much timed it perfectly with the low. Obviously, that was not intentional, it's just the way that happened, right? Then we turned around and we ripped it higher kind of throughout the day, and we've closed right here. So let's put this in perspective. Again, this is the daily chart of Maycorn. Here's the 240-minute, and here's the 60-minute chart, all right? And all these things are going to work together to help us figure out what's going to happen next inside this trend. Now, for the last several months, corn has not been trending. It's been very, very difficult to establish any type of a trend, and we've just been working this sideways pattern. And you can tell that just by how sloppy and choppy and overlapping it all is. And then you have this move here, which is a downtrend. So you have to assume that the downtrend is in effect until something takes you out of it. And that something can be um, needs to be on the time frame in which you are actually trading. So our primary time frame is the daily chart, all right? And we're going to be trading this thing as if the daily chart is in charge, and then we're using the hour and 4-hour charts to supplement and help accentuate your entries and your exits. Now, let's just make this really simple, okay? On the daily chart, you have this move that started at 682, and let's just say, for argument's sake, that a short-term low here is in place at 622 and a half. So, okay, we have 1, 2, 3. Now we're going to get a 4, and then we should get a 5, which I would guess will terminate somewhere down in this area. So what's coming here is a selling opportunity, in our opinion. And so let's talk a little bit about what to do with current positions and how to manage them. We did not take any action today in corn. We decided just to let it trade and decided to wait and see what happens tomorrow. This is a hook reversal. We traded to a new low, we reversed, we came back into the range of yesterday, and we closed higher by about 6 cents. This is called a piercing pattern or a hook reversal. Okay, it's not as powerful a signal as if we had taken out yesterday's high. That would have been much more significant, but it's a minor buy signal. Now you get minor buy signals in downtrends all the time, just like you get minor sell signals in uptrends all the time. And so you don't want to ignore them, but you also don't really want to live and die by them. So might we go next? Well, if this is a short-term low, then and we get follow through tomorrow, then the next most likely target is the 38.2% retracement up to the 61.8. Anywhere in this zone between 660 and 645, there's a 15-cent zone there, where we would say um, uh, a correction is most likely to unfold too. And so if you've been short this whole thing, that seems pretty hard to hold all the way through, right? And if your risk tolerance is such that you don't mind, then fine, just hold it and don't worry about it. If you're a little bit more attached to the win from this level and you want to manage it a little bit tighter, let's talk about that. So here is your 60-minute chart, and you can see this chart. Let me break it down here for you. This cloud, and a lot of you know that we like to use these. The cloud serves really as a stop line. Where should you put a stop? Well, it's not a magic formula. It's where your comfort level meets something objective. So if 660, which is the 61.8% retracement level, is too much for you to sit through, then maybe you want to look somewhere lower, like into the 640 area. This is kind of an attractive area to exit on a short-term basis. If we're going to break through it, hopefully we trade a little bit higher, then you can sell it again up here, okay? And if we trade up into 640 and then we work lower, then maybe we'll be able to then maybe we'd be able to re-enter a short position somewhere down here. On the daily chart, that makes some sense too, because you have these points of reference to work from. So yesterday we broke through the low here at 636 and 3/4. Today we closed right below that at 3636 and a half, which is why we decided not to take any action. Now, what we have here is a low, an open, a close, and a low right here at 640. And that's also the top of our 4-hour cloud, or our 60-minute cloud, which is right in here at 640. So if tomorrow we trade on in and we're trading at 640, we're going to be above the 60-minute cloud and back above all of those points of resistance that I showed you. And so that might pave the way for something a little bit higher up into this level. So 640 would be a logical and safe exit. Now I'm not saying take a speculative long position. I'm just saying that's probably a good spot to exit or trim your short position if you're trading to the downside. And that's something that we'll do tomorrow, if we do get there. I don't think that this move is done. I think we're going to maybe bounce a little bit and then turn around and rip lower. There's nothing down here that tells me that we should be looking for higher prices. Soybeans, no change. You can see where we are in relation to the cloud. I think it's an inside day. Really, not a whole lot to talk about with soybeans. We'll see where we trade tomorrow. If we blow back up through here, then we may need to rethink things. But for now, this cloud is holding, and we're looking for beans to reverse and go lower. December corn is the same analysis, except for it's even more bearish. It continues to lead the way to the downside. I don't see any reason to rush for cover on December corn. And wheat, we said earlier we were going to make our corn decision off of wheat, and I think that had some merit, because as wheat held $8 and started to rally, corn really took off. So all those things happened all at once. But look what wheat did. It traced a net zero on the day, really. It's an inside day. Didn't take out yesterday's high, didn't take out the low, closed right in the middle of the daily range. And so I think the pressure is still going to be on the wheat market, which is why I wouldn't be surprised to see corn just go ahead and roll over with it if wheat finds some pressure tonight. But, we just don't know. We'll have to let it trade, see what it does, and move and adjust accordingly. So for wheat, no change at the moment, and for corn, no changes. But we're going to watch that 640 level, and we'll probably exit some short futures at that 640 level for our speculative people. From a marketing standpoint or a risk management standpoint, no changes. I don't see any reason to make any decisions there whatsoever. I hope that's helpful. That's 8 minutes. We'll keep you posted as these things continue to trade and work and digest the information and the price action that the traders are struggling with. We'll talk to you later. Have a great night.